Good day, everyone. I'm Chris Jordaan, the CEO and President for Superior Gold. We own and operate the Plutonic operations up in WA, and we are progressing quite well with our turnaround story and looking forward to a really strong year this year with increased production compared to last year, which has also been a significant improvement from 2020. A lot of activities going on at this stage, and really looking forward to the second half when all the plans that we pull together really comes into fruition and start delivering.
Good man. Well, Chris, that's what I want to talk about. I want to talk about how you deliver a good, strong second half. Okay, right now, economy not working in anyone's favor. Inflation rampant. People worried about the future, stagflation, the lot, right? Wars in Ukraine, and politicians, printing money for fun. So it's not a good environment. You walked into an already difficult environment where you needed to steady the ship and maintain 70 to 85,000 ounce steady state production. Are you doing that?
Yeah, for sure. If we look at the first quarter, and maybe I can just go through the 4 quarters and what the expectation is. First, looking back, the first quarter, as we communicated, we did a shutdown on the mill, a 15-day shutdown, which impacted our production in the quarter. However, it's interesting, if you compare Q1 of this year with every single quarter of 2020, we produced even more than any of those quarters. So despite the shutdown, it clearly demonstrates that we've moved the performance level of the mill. The importance of that shutdown is really one of 3 elements in setting ourselves up for the second half of this year, which will see 2 things happening. The one is upping the production annualized rate from the underground mine to 1 million tons per year in Q4. That's our target. Currently, we're on track on the underground mine, so really looking forward to seeing that coming in. We bringing in an additional jumbo. We'll be replacing some of the trucks and so forth. So that'll stand us in good stead. So focusing on reliability and productivity of our equipment will help us along that way. And of course, the fact that we finished the the new resource and reserve, that will culminate into the life of mine to further augment that initiative. The second thing that we had to get our heads around was getting access to higher grade open pit ore. We finished Perch in March this year. In April, we moved into Main Pit Deeps, which has been challenging. However, we're looking forward to seeing that ore flowing really strongly in the second half. So what will that bring us? Well, if you look at Perch, we typically had a grade about 0.6 to 0.7 grams a ton. We're moving to, on average, 1.5 to about 2.5 grams a ton on the open pit. That's going to be about 45% of our feed into the mill. Needless to say, that's going to help us a long way on improving the grade for the mill grade. Then the third thing is unlocking, as I said, the potential in the underground mine, taking that up to 1 million tons annualized rate in Q4. We're on track on the underground mine, so that's looking good. The production guidance is between 80 and 90,000 ounces. We're still sticking to that, and confident we'll be able to deliver that. There's one, I think, aspect which potentially could have had quite a devastating effect on the organisation, but I'm pleased to say that we've been able to manage it really well, and kudos to the production team there, and that's the impact of COVID. Anecdotally, we've heard that some of the other assets are running with between 30 and 40% of their people impacted by COVID, and that makes operations really difficult. We've been able, through the experience our general manager had whilst he was working in Papua New Guinea, using those practices, bringing it to Australia, we were able to keep that down to a maximum of 12% of our people being influenced. This morning, we have about 3.7% of our employees impacted by COVID. So that's dropped off to I think a palatable level. We certainly did see an impact during, if we had 12% of our people impacted on our production rates. So we're busy catching up again on that front. So it's really lining up and being able to manage those 4 elements that will set us up for the second half of this year.
Okay, so let's break that down a little bit, because in a very meaningful way, Chris, no one cares what your problems are. No one cares what your admin jobs are. They care about, are you going to hit those answers each month, each quarter, or not, right? And that's the job of the CEO. It's a tough job,
That's great.
Wouldn't want to do it myself. But let's talk about the mill, because you shut it down for a reason. Just remind people why that needed to happen and what the immediate benefit is going to be.
Yeah. Okay. So typically on an operation like this, between 7 and 10 years, you do the shutdown that we done. The shutdown has never been done in the history of the business. In fact, the bearings on the mill that was originally installed the day it was built were still the same bearings. So we took them out. In fact, SKF asked us to send those bearings back because they want to understand what went right. Why did they last that long? Certainly towards the end, we started seeing vibrations emanating from the mill. It was beyond levels that we were comfortable with. In addition to that, we know that we're going to push hard in the second half, and we want to get that mill. We wanted to get that mill absolutely humming to be able to run at production or installed production rate, which is 1.8 million tons per year. So we did the shutdown, spent the money on it. When we restarted the mill, vibrations were below detectable levels, or well below the limits that we wanted to operate. And then we started turning up the feed into the mill as the ore became available. And, we're seeing signs of it running for extended periods at 1.8 million tons per annum. Now, how significant is that? Last year, we did 1.56 million tons through the mill. Now we're running at 1.8 million tons annualized rate. So it is a significant uptick. It's putting pressure on the mine, of course, to provide the ore, but that's why we're upping the production from the underground and we're going into main pit deeps.
Right. I mean, your job is to it's a big old unit, right? And your job is to fill it and for it to be as efficient as possible. So you putting tons in, again, I'm going to be slightly crude. I don't care. I care about the ounces coming out. So what are the things that you've got to do? You've got to put, ore through. Are you looking at ore sourcing? Are you looking at high grading? What do you do to optimize what comes out the other side?
So we're standing steadfast in our strategy on the underground mine insofar as our target grade's concerned. So stope grade target still remains at 3 grams a ton. 3 grams a ton on average, which if you then add on the development ore is typically about 2.6 to 2.7 grams a ton that we're getting from the underground, which is about 55% of the feed into the mill. And then we're bringing in main pit deeps. Now, if you go back just into the first quarter, we were still operating in Perch. Perch was providing about 0.6 grams a ton, 0.7 grams a ton. We're now into main pit deeps. We've hoisted the first ore, 1.99 grams a ton. So the volume is still not there because it was impacted because of COVID and some rain events we had, but we're starting to see that better grade open pit feeding in. So 45% of our feed moving up from 0.6, 0.8 grams a ton now to something between 1.5 and 2.5 grams a ton. That's going to be the biggest spinner in increasing our production this year. And that's also part and parcel why we're confident that we'll be able to deliver within our guidance, which is between 80 and 90,000 ounces this year.
Right. And how do you sustain that? Because I think the company has in the past been accused of high grading to the extent that it kind of wasn't managing the ore body, or what was going through the mill, and margins fell and fell and fell. This is not an environment where you can afford for margins to fall. Marginal projects will fail. It will, it's terminal for the company. So how do you sustain that?
All right. So first thing is maximizing the throughput from all the production out of the underground mine. We've just finished the resource and reserve. We're busy finalizing the life of mine. That'll be finished towards the end of Q3, early Q4 this year, which will give us a very strong indication how hard we'll be able to push the underground mine over the next 2 to 3 years. So that's really the base feed for us into the mill. The second piece is what do we do on the open pit side, as you quite rightly mentioned, how do you ensure and sustain this quality feed? So main pit deeps we expect to be mined out towards the end of this year, maybe run over a little bit into next year. There might be a little bit more than we initially anticipated. But let's assume till the end of this year. We're busy lining up Hermes South, which will potentially provide 1 million tons of ore at about 1.4 to 1.6 grams a ton. So a little bit lighter than what we're seeing in main pit deeps, but still a solid a number that we'll be getting from there. And then in addition to that, as you picked up, the exploration cost or exploration investment this year has in fact doubled. We have now added surface drilling targets, and 3 of them is in fact just directly to the east of Hermes South, which is Pelorus, Seaborg, and Central Bore. Now that is the kind of ore that we'll be looking at for 2024. So 2023 would be most probably a Hermes South solution, and then going into 2024 and potentially into 2025 will provide, will be fed from those pits, which is towards the east of Hermes South. As I said, Central Bore, Seaborg, and Pelorus, of which Central Bore would be, I think, the sweetheart of the 3 options there. At that stage, we believe, and we started the pre-feasibility study on the main pit pushback. At that stage, we'd like to switch then over to the main pit pushback, which will provide us, if you look at the PEA numbers, 360,000 ounces over 6 years.
Right. Okay. So that's the plan. Actually, I need to go back to just something you said earlier. Question, was a really good question sent in, was by someone, is, are you considering another pushback at Perch in order to access the ore between it and the Plutonic East area?
That's a very good question.
Yeah.
Let me answer it as such. Okay. So after we finish the life of when we cut off all the data that we used into providing the resource and reserve, there was, of course, subsequent work happening. The one part of that would be Indian access, but more importantly, we've also looked at Plutonic East, both underground, and we've applied the technical approach that we used for the Plutonic Main underground onto Plutonic East, so we know how many ounces are there now. So this is all subsequent work. It's not in the resource and reserve yet. We've now extended that towards the east of Plutonic East. There's an area which we call Big Fish, which includes and could be linked up with Perch. Now, to answer that question, that work is currently happening as we speak to try and understand whether these bodies in fact do link at depth. And then if that is true, is this an opportunity to restart Plutonic East, or is it an opportunity to do an open pit operation which will include Perch? That the jury is still out, but well spotted. That's certainly a piece of work that we'll be looking, or that we are looking at the moment. We would probably get the first view as to what the potential is towards July this year. So it's still a bit of work that we need to do on that space before we can start, forming a view whether we'll be able to move into that area.
Yeah, we've got some very clever viewers indeed. So thanks for that question. Let's get back to this. I'm just trying to keep this super simple for people like perhaps viewing it from outside, if not used to mining. So seeing you as a producer, you talk the language of being able to sustain that and grow that, right? And then it's a question of, right, okay, you're building this towards 100,000 ounce a year producer. You're selling gold into the marketplace. You're getting money for it. What are you doing with it? Because there was a kind of big patch-up job to be done when you first walked in here. You've got to bring a discovery or more ounces into the story. So exploration is a big piece of this. And as you just described with with Perch, maybe there's some stuff that's been left behind which can be added to the pile. So are you just burning through the cash you're producing, or have you got a view or sense of when this thing actually starts throwing off cash, which can be used for, more positive things like, dividends, acquisitions, or expansion of the current project so that you become a 200,000 ounce a year producer?
Well, we certainly have the latent capacity in our mills if we can get the ore at the right grade, to go up to 150 and even more than that. But that plan still needs to be developed in appropriate level of granularity before I'll, start actively promoting that. I think if we look at our cash balance, and we're managing it very tightly. For instance, on the exploration side, the exploration team has an overall budget, but their budget gets approved on a quarterly basis, which means you drill this quarter, we analyze, and then we decide whether we give you money to go on. All right, and it also drives that discipline that we don't spend money on a lost cause. So that's part and parcel while we're also doing the desktop work now at Big Fish. We will not put a drill on that property until we understand with the data we have whether there's something potentially we can go and have a look at. So So that's the approach that we follow from that perspective. The other thing is we believe that we're in the ballpark on spend insofar as exploration is concerned, and we believe that it can, well, given the results we've had, certainly giving us what we were hoping for. And some examples is the Eastern Mining Front, which was a recent find. We're looking at Indian Access, which we reported on, I think it was 16 December last year, and just now on the 31st of May put another report on Indian Access. And I've got the report here. We're talking about drill holes 58.9 grams a ton. We're talking about 17.6, 26.7, 20.5. And the interesting thing there is that this area, which is 500 by 300 meters and is open at depth and on strike, is very close to the portal. And we've messaged that quite strongly. So we don't know yet how many ounces we'll be able to extract from it, but the results are really positive, and it's giving our engineers something to work with to start pulling this plan together. So in essence, what I'm saying to you is we're getting close to really understanding how we're going to sustain the 100,000 ounces, but there's a parallel stream of work to say, so how are we going to get that second mill going? What's the grade going to be? If it's at 2 grams a ton, we're going to get another 50, 60,000 ounces on top of what we've done up to now. So that's certainly a big lever that we want to pull into the future. We are looking across the border for other opportunities to see whether we could potentially come up with a deal to provide ore for the second mill. I think the first mill is spoken for to a large extent, and it's a question of just delivering those projects.
But how does the second mill work? I mean, are you saying that you are looking at ways to try and fill that with your own? Because we've talked in the past about tolling, and I think with fuel prices being what they are, I guess that radius of tolling has shrunk dramatically for a lot of people. So how do you make the decision on when to bring, or if you bring your 1.2 million ton second mill online?
I think there's another thing that I would like to add to that. Why looking across the fence is probably not the ideal, but can it play a role? Yeah, for sure. We're not discounting it at all. A lot of the tenement owners out there are asking top dollar for the assets, and we're certainly not going to do something that doesn't make financial sense to us. However, and I infer or spoke a little bit about big fish, and we don't know yet what the numbers are, right? And I've asked the geologists now, do they at least give me some directional number? They don't want to say anything because they know I won't forget the number, and they're going to keep them to that number. But the key thing here is we are actively looking for ore from our own properties that potentially could be earmarked for the second mill. And the reason is it's going to be the cheapest ore. It's going to be very cheap to truck it up to the pad to get it into that processing plant. And it'll be something that's completely within our control. And of course, within our permit regime, etc. So it ticks a lot of boxes. The question is, given the complexity of this ore body that we're dealing with, are we sure that the gold is really there? And if you look at the resource and reserve, the reinterpretation of the spatial positioning of the ore on the underground, we've added 66% to our reserve. Our measured and indicated has gone up, and inferred we added about 600,000 ounces, which we can allocate towards the drill work that we did in the Western Mining Front. So Plutonic East or Plutonic as a whole certainly provides a lot of opportunity going forward. The challenge we have now is, given the fact we've got 5.5 million tons of underground reserve, how quickly can we get it out of the ground? So that's where the life of mine work comes in. We need to finish that work. As I said, that'll be done towards the end of this year in Q4 to fully understand exactly what that's going to take to unlock that potential. So not discounting other properties, but absolutely making sure that we utilize or unpack the potential of our own property.
So how much did flooding and COVID set you back?
Firstly, it impacted the open pit operations. We lost a few days in Perch, which, given its size, we were able to claw back on it. Main Pit Pushback, not Main Pit Pushback, Main Pit Deeps was affected on three fronts, really. The one, just directly having enough people on site to be able to operate the drills, the trucks, the excavators, etc. The other thing was mobilizing to get people there, and availability of kit was another issue. The third one was, once we got going there, we had this torrential rain, more specifically in May, so that held us up. We probably lost a few weeks there. As I said, we're in the ore now, which is a big step forward for us. But it's still on time for the second half of this year. We believe we'll be able to pull through with the things we have to do to set it up to really provide the appropriate levels of ore for the mill. And now with the mill running at, from time to time at 5,000 tons a day, we typically get about 2,500 to 2,800 from the underground, and the balance of that will come from the open pit.
Okay. And here's one for you. This may not be for you. This might be for your marketing team. But how do headlines like 83.2 grams gold over 3.2 meters and 203 over 1 meter, is that wise when you're trying to have a kind of steady the ship phase of the business and show that there's a kind of sustained growth? Because do you track the right sorts of investors with headlines like that?
Yeah, that's a very interesting question. I think what's important is one has to put it into context. If you get these kind of drill results, and we've had it from many people and saying, so when are you going to start mining there? Is your average grade going to go up? We don't know yet. All I'm saying is that we've drilled there, there's gold, and there's a lot of gold. It's not included in the measured and indicated, in the mineral resource and reserve yet. That's work that we're doing this year. I think what the market also needs to understand is that we were typically mining between 8 and 12% out of reserve for the last 5 years. In the last 4 months, we've mined 55% out of reserve, which is purely based on the new modeling. So the block model is a lot more accurate, which gives us a solid base to start building the life of mine so that we can have a realistic plan going forward on how we're going to unlock not only volume, but also grade from the underground mine. And Indian Access certainly provides that opportunity. I think what would be unwise if we go in there, we only mine there and we high grade the mine, and at the end of the day we sit with just lower grade later, and it's a hero today and a zero tomorrow. So what we're going to do is take that, which did not exist 6 months ago, we didn't know about it 6 months ago, take those results, do the necessary development work, engineering work, and see how we can then blend that in as we keep on developing the rest of the mine. Okay.
I just think it's a really important question in terms of, given the history, pre your arrival, pre-Tara's arrival too, you've got to kind of question the kind of that narrative coming out of a company with the history you've had, right? Because I kind of like the thought of, you mentioned extending life of mine, increasing mineral reserves and mineral resources and so forth. And that says the factor that you are, as a producer, now going to be measured on is each month or each quarter hitting the ounce number, right? Not how much you put through, but how many ounces come out the other end. That's the factor which people will judge you on most. And yeah, I just wonder if you track the right sorts of people, if you use those kind of crazy big headline numbers. So tell us about the timing of when you're going to be able to assess that, how you take advantage of that, and what that could do to your average grade.
Yeah, so the work specifically on Indian Access, and it's certainly something that I put my hand up and handed the baton over to our engineering team, is to really push that hard. The life of mine that we developed as we were building the new resource and reserve is going to change because of Indian Access. I don't know yet what that impact's going to be, but given its location, given the fact that it's fully developed around that area, so we could access it relatively quickly. It's not 2 years worth of development before we get in there. It's literally months. And in addition, as I said, we also going to get in or buying an additional jumbo, which will arrive in Q3, which will give us that additional capacity to develop faster. And we need to do that to ultimately get to that 1 million ton mining rate towards the end of the year. So we're trying to line everything that's within our control, line it up to be able to deliver what we said we're going to do.
Okay, months, not years. I love it. Okay, Chris, great catch up with you. Sounds like things are moving, despite all the things that are being thrown at you. Things are moving. It's been tough. It's been a tough year for sure. But things are moving ahead. You're hitting the numbers. That's what we like to see. Keep doing that, and I'll see you in Quebec in a couple of weeks.
Yeah. Exactly. I looking forward to it. Maybe is there one thing that one thing that I could quickly call out?
Sure.
And organisations don't often talk about it. It's something that I personally am very passionate about, and got a bit of a surprise, not a positive surprise, when I joined. When we looked at the safety performance of our operation, and we know that's a critical indicator of operating discipline. If you can't get that right, anything thereafter is just so much harder. So we implemented what we call the People Safety and Risk Transformation Program, and we've been able to reduce our recordable injury frequency rate by, it's probably now, if I look at the NMA numbers, has dropped, more than 30%. So it's been a significant turnaround from that perspective, and it's just once again a strong indicator that we're not only focusing on putting projects or lining projects up together, but also focusing on the appropriate things on the operational discipline side to ensure that we have that long-term cadence, long-term rhythm and routine in our operation to consistently deliver.
Well, I'm glad for you to say that. And very important indeed. Chris, thanks again. See you soon.
Thank you. Cheers. Bye-bye.